And welcome to this week's look at the major stories affecting the market so far. And it's going to be a pretty busy week. What are we going to take a look at today? Well, we're going to start off with cable. That's the Great British Pound against the US dollar. We'll follow that up in the second little story, see how the dollar's getting on against some other major currencies. Thirdly, we'll take a look at what's been happening to gold over the last week or so. And we'll finish off with NVDA and forecasts are being up there, which is good news for the NVDA share price. So, back to cable. So, sterling, Great British Pound against the US dollar hits a 4-month high after the UK GDP news. So Thursday morning, first thing, the UK Office of National Statistics released their GDP news. Now, a month ago, GDP was flat, 0%. We're expecting it coming at 0.2%, so very small growth. The actual figure came in at 0.4%. Now, the new Labour government in the UK is going to welcome this because they're huge on pushing growth. However, how will the Bank of England respond? Now, growth may provide an argument to keep interest rates higher for longer due to a fear of an inflationary surge, i.e. we're starting to grow again, bang, prices will start increasing once more, which of course we spent the last 2 years trying to control. Now, Bloomberg reports that markets currently assess the likelihood of an interest rate cut at the next meeting of the Bank of England, which is the 1st of August, at just under 50%. Overall, how did the markets react to this news? Well, the pound went up, of course, as we would expect, and particularly the pound against the US dollar hit its highest level since early March this year. Will it continue? Will the pound continue to rise against the dollar? Well, if we take a look at the chart, that shows us the price is basically in a rally. We're up 1.7% since the start of July, and that price is moving in an ascending channel, which started back in early July, with one spot 27755 switching from resistance to support, and that's going to be quite key. The price surpassed the June high at 1.28600, 1.28600, and is heading towards the year's high of 1.28930. Now, support may well come from the lower boundary of that ascending channel that you can see, and the strength of the bullish trend is indicated by the size of the B to C retracement, which is approximately 0.382 Fibonacci retracement level of that A to B impulse, which we can see, and that broke the 1.27000 resistance level. Now, if the sentiment remains the same, the bulls might well attempt to surpass the year's high so far. But, and very, very important, we've got US CPI data due out Thursday, 3:30 p.m. That's GMT +3. And that could well influence the whole dynamic for the US dollar, particularly against the Great British Pound, but in fact, against most of the pairs it trades with. So we could well see some volatility. Don't forget your risk management techniques. Okay, so we've seen that the GBP, the Great British Pound, is doing particularly well against the US dollar, but how is the dollar faring against a couple of other majors? Well, euro against the dollar has jumped, and dollar yen, the bulls seem unstoppable. Start with the euro against the US dollar. Now, the euro started an increase above the 1.0780 pivot level, and there's a key bullish trend line forming with support near 1.0820 on the hourly chart that we can take a look at. The pair settled above the 1.0800 level and the 50-hour SMA, simplified moving average. There was a high at 1.0845, and we seem to be sort of consolidating gains above that now. And there was a test of the 23.6% Fibonacci retracement of that upward move from 1.0710, the swing low, to the 1.0845 high. However, the bulls certainly seem to be active above 1.08. We've got some support levels coming around 1.80820, then 1.0780. If that breaks, we could see a decrease down to the 1.0740 level, and below that 1.0710. Looking at the upside, we got some resistance at 1.0845, then 1.0880. If that resistance is broken, we could see the price increase up towards the 1.0920 mark. Again, we've got some key data out, and that is going to be a major driver. Taking a look at the US dollar against the Japanese yen now, that climbed above the 106.50 and 161.40 levels. It settled above, again, the 50-hour SMA and that 161.40 level. Now, current price action seems pretty positive, and it seems to be consolidating above that 76.4% Fibonacci retracement level from the last key decline that we can see on the chart. And immediate resistance is near 161 spot 80, with some major resistance at 161 spot 95. If we close above there and the RSI moves above 60, we could see the price rise towards that 162.50 level, and then further resistance at 163 spot 20. That breaks, we could be looking at an increase in price up to sort of 165. Flip side of every coin, of course, on the downside, the first major support is near the trend line at 161 spot 50, then 161 spot 40's pivot level. Now, if we close below the 50-hour SMA and the 161 spot 40 level, then the pair could decline steadily towards 160 spot 25, then maybe further to 158.8, with the next major support under that at 156 spot 5. Already mentioned US CPI data coming out, going to be a major player, and of course with the yen, you have to consider potential Bank of Japan intervention. So good time to be using those risk management techniques, stop losses, etc. Okay, third up, and we could talk about gold again, and following on from last week's story, a little bit of an update, and the gold price has fallen from its 6-week high. Now, as the chart shows that you can see, on Friday the 6th of July, the price rose above $2,390 per troy ounce for the first time since the 22nd of May this year. Now, that was following the release of key US employment data, which indicated a softening of the labour market, and thus an increase in the expectations of an interest rate cut in September. However, Monday saw the price fall back down towards the 2360, that's $2,360 per troy ounce, which suggested the bulls were unable to maintain control of the price above that level. So what's going to happen? Will the decline continue, or could we see a turnaround in fortunes and resume that upward trend? Well, there's clear support at the $2,300 level. In fact, we quickly rebounded from here each time in June that it went through that level, and you can see that with the arrows on the chart. The price action since April gives us enough reference points to establish a descending channel that you can see in red, but longevity of that we're not so sure about. It's also possible to believe that the bullish breakout of the local resistance that you can see in black might be a false breakout, which again would lead support to a further decline in price. Seller activity is going to be pretty key here in the $2,380 to $2,400 range. If that seller activity does continue, we could see the price decline to that important support level at $2,300 a troy ounce. But there are some quite important external influences coming up this week. We had Jerome Powell testifying before Congress on Tuesday and the House of Representatives on Wednesday. And what we were looking there for was hints of signs of weakness in the US economy could provide a positive impulse for the gold price. And it was a bit of a mixed bag, but also, of course, very, very important is signs of an interest rate cut. And in fact, CME Fed Watch at the start of the week had a cut in September at about a 77% probability. Obviously, declining interest rates increase the attractiveness of gold, and we could see a positive move in the price there. If we take a look at the price sort of circa early Thursday morning, it's around the 2,380 mark. So we've come up off the lows from Monday. I say interpretation in what Jerome Powell says, but again, important data, inflation figures out on Thursday afternoon. So keep your eyes and ears open. Okay, we're going to finish off this week by taking a look at an individual share, and it's NVDA. Obviously, massively talked about for the past few months now, NVDA, and analysts are raising their price forecast. Now, according to FactSet, in July, 7 analysts have raised their target price for NVIDIA for this year. KeyBank analyst John Veen has in fact raised his forecast from $130 a share to $180 a share. That's approximately 33% above sort of current levels. Thus, how did NVIDIA stock price react? Well, the stock price went up. Tuesday, we closed above the $130 per share for the first time since June the 20th. In fact, we're up more than 160% since the start of this year alone. Wednesday, the price closed at $134.91 per share. So a pretty positive rally for NVIDIA. Will the rally continue? Well, let's take a look at the chart, see if that gives us any ideas. And chart data does raise some doubts over the ability to set new historical highs as it has done earlier in the first half of this year. Have a little look. Notice the price behaviour when crossing this $130 per share psychological level. And if we take into consideration the volumes traded in the video on the Nasdaq, what we can see here is that the rise to peak A occurred on below average volumes. The decline to low B that you can see occurred on significantly above average volumes. Then the rise to point C was also on below average volumes. So we're seeing the price up on low volumes, down on higher volumes. Now that way may well suggest a lack of buyers above that $130 key level. Obviously, having closed above that, will it hold as we move forwards? So currently we can see from the chart that the price is in the upward channel that you can see in blue. The price is in the lower part of that channel, and peak C is approximately the 50% Fibonacci retracement level of the A to B significant downward move that you can see. So it is quite unclear. Obviously, analysts raising price targets generally helps to encourage a little bit of buying, but is there the demand above that 130 psychological level as we move over the coming weeks and months? Anyway, we wish you luck with your trading in the week ahead. Bye for now.